high. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking sector. It is the 18th of January and I am Ruchika Chitravanshi. This week's cover story is about RBI's guidelines for self-regulatory organizations or SROs. In Banker's View this week, we have Mayank Bathwal, CEO of Aditya Birla Health Insurance. In Banking for You, we will tell you all about green taxonomy. Our consulting editor, Tamal Bandhopadhyay, joins us for the Expert Take segment to discuss the latest happenings in the banking space. At the end of the show, we will tell you the results of the last week's poll and the question for this week. RBI Governor Shaktikanta Das recently asked the fintech firms to form a self-regulatory organization or the SRO. SRO could provide a link between the regulator and the market participants, although it is not a very formal setup. Of course, it would be like a watchdog, providing a code of conduct and encouraging overall transparency. In our cover story today, Raghu Mohan tells us why RBI is insisting on SRO and what it would entail.
Self-regulatory organizations or SROs have emerged as a major area of focus for the Reserve Bank of India. On Monday, it released the draft framework for SROs in the fintech space. According to Mint Road, by pivoting towards a culture of self-governance, fintechs could proactively set an either to industry standards and best practices. This approach could empower them to demonstrate commitment to responsible conduct and innovation even in the absence of formal regulation. Through collaboration, the industry could collectively identify and address challenges, foster an environment where innovation flourishes, and guide a shared commitment to ethical business practices.
So in last few years, the credit market have expanded phenomenally, not just in terms of scale, but the sheer diversity, the complexity, the number of supply side players, and the way consumers are accessing credit. This also means that what we have today is a market which is highly diverse. The speed is paramount, and in that context, it's important that regulations, compliances, and oversight of the industry is in tandem with the market and vice versa. And therefore, I think the regulatory framework which RBI has put in for SROs is really a vote of confidence in the market to say that they have important player to ensure that financial market grow in a very responsible and healthy manner. So it's really about regulator and market coming together and ensuring what is right for the sector as a whole.
Mint Road had, on the 21st of December 2023, flagged the role of SROs to strengthen the compliance culture in regulated entities or REs to provide a consultative platform for policy making. Now it has issued an omnibus framework for SROs. In the fintech sector, FACE and the Digital Lenders Association of India have approached the RBI for SRO status. There have been whispers that the Indian Banks Association or IBA and the Payments Council of India (PCI) are also to set up an SRO for digital payments jointly. It looks like more than one SRO for every sector may well be the norm. Microfinance institutions have two SROs, Microfinance Institutions Network and Southern. But there are a few issues as well. They are as follows. Let's take the case of independent directors. According to RBI's Omnibus framework, at least a third of SRO's board of directors, including the chairperson, must be independent. This will increase the demand for IDs in financial services, but also the issue: just how many will raise their hands to join the board of an SRO? Well, in the case of private banks, independent directors are said to have expressed the view that they have day jobs too and it is not worth their time to get involved in executive matters. Industry sources believe that only a few will be willing to be on the board of an SRO. Remuneration will be a sticking point and their expected job will be onerous, given the premium Mint Road now places on governance.
So, I can talk on behalf of FACE, where we already have more than 50% of independent directors. The very idea is that, independent directors can see, beyond the narrow interest of business and really work for the sector. That per se, I don't see a problem as a whole for industry association. Attracting that kind of talent should not be a problem.
It is early days in the SRO journey, but it will be interesting.
So it looks like each sector may have its own SRO. We just hope there are not too many cooks. On to our next segment, the Banker's View. This week we have an exclusive chat between Business Standard's Manojit Saha and Mayank Bathwal, CEO of Aditya Birla Health Insurance for you. Here is the chat.
Hello and welcome to the Business Standard Banking Show. The health insurance sector is on a steady growth path post the COVID-19 pandemic. In fact, the premium growth of standalone health insurance companies has outpaced the overall industry trend. Aditya Birla Health Insurance, one of the leading standalone health insurance companies, has improved its market share to 10.7% among the standalone health insurance companies in the first half of the current financial year. Today, we have with us Mayank Bathwal, CEO of Aditya Birla Health Insurance, to speak to some of the emerging trends on the health insurance sector and the company's strategies in the coming days. Mr. Bathwal, welcome to the show.
My pleasure. Thank you for inviting me, Monojit.
Let us start with the penetration issue. The government has taken several steps to increase the insurance penetration in India. However, the retail health insurance penetration is still hovering around 3%. What could be the reasons for this, and what could the steps? What could be the steps to address this issue?
For a product that is required by every citizen of this country, technically we must find a way to see how we can have segmented approach for each segment of the population. I think government has decided to play the role of being the funder for health insurance for the what I would say the bottom about 60-65 crore people through the Ayushman Bharat scheme, which is, as you know, the largest healthcare funding scheme in the world. Typically the private sector has played what I would call the third segment, which is another 40-45 crore, in which both group and retail segment work. But I think there's a missing middle in between, which is where there is a question of affordability, who can pay but they can pay less, where today neither the government has been able to kind of create some scheme, because of course for fiscal reason they have started with the bottom population first, nor the private sector has really been able to make a big headway through the really affordable products. And I think that's where a lot of work is happening between the different stakeholders to see how we find a model for the missing middle with that 40 crore people. But if even in the segment above, which is where I would say it is more about value than necessarily affordability, 40-45 crore people, what you just said, the retail penetration is very low. But I think they have to be solved through what I feel are four legs. One is more awareness. Second one is relevant product for each segment. Third is how do we make product affordable for each segment to the extent that they can pay. And the last one is, how do we create the experience for consumers who have paid so that they can then through word of mouth promote this. So I think each leg has to be addressed separately.
Now you talked about affordability. Now we have seen in the last 2 years, especially after COVID, the health insurance premiums have increased significantly. Do you think the trend to continue?
I think the premium has generally increased about, if I were to talk about us, in 3 years, we've had kind of a couple of increases of about anything between 7 to 10%, twice. And the reason is this, that basically what does an insurance product cover? The cost of healthcare. If I look at the cost of healthcare, an average claim size, Monojit, used to be 40 to 42,000 prior to COVID. So if a claim comes, the average size of the claim used to be that. Post-COVID, it has crossed 60,000. In fact, recently it has even gone above 65,000. So if this cost of treatment is going to increase, it is automatically going to be passed through the insurance premium.
Premiums, yeah.
So that is one issue that we have to yes, we can bring in premium management, but how do I bring my premium down if my cost of delivery, which is what we are funding, is going up? So medical inflation has definitely increased on
Okay.
one part. And the second thing that has happened is that post-COVID, we are seeing higher incidence of some specific illnesses. For
Okay.
example, heart conditions. We are seeing many more people having, heart attack and other heart challenges. Many more people having infectious disease. So I'm sure you've heard recently this whole COVID wave and all. Fortunately, this time not many hospitalizations have happened.
Correct.
I'll not be surprised if you've also observed and your listeners have also observed that the number of times people are having these cough, cold, infectious conditions and all respiratory problem
Yes,
has
yes.
definitely increased post-COVID. Now,
Correct.
whether this is because of COVID, whether this is because of vaccination, jury is still out on that. And the last thing I'll say is that, I think the continuation of this whole problem of fraud, waste, abuse, which we
Right.
need to address, seriously fast, continues to kind of bring, be a challenge in reducing the wastage in the premium, because every fraud or wasted claim cost that I'm paying is actually hitting the consumer only, because then it will
Correct.
ultimately get passed through higher premium. So as
Right. But
an industry, we are working on that very seriously.
you have witnessed very strong growth in the last 2 years, and the growth has continued in the first 6 months of the current financial year. So, do you think the trend is going to continue? The premium growth going to be steady in FY25 also?
I think the lots of effort being made by the regulator, government, to kind of make sure that this penetration in this segment increases. And my sense is that this 25-30% growth rate that we are seeing will not only sustain but will increase in the times to come, because one very big segment of the insurance in the healthcare cost, which is outpatient expenses, is not even covered in insurance today. And we will have to find a way to bring that into insurance coverage. The day that comes, this growth will only become higher, is my prediction. And therefore, I think for at least the next 8 to 10 years, this segment will continue to grow very fast. And the other thing that is happening is because people are now also wanting to be focusing on health. So as a combination of both of these things, that focus on health, and if something happens, you must have insurance, ideally to take care of the medical cost. I think not only will insurance grow, but model like ours, where we are talking about health first, where we are talking about models where we want to encourage our customers to live a healthier life, because it's completely in the interest of both customer and insurance company, they will only become bigger and better in times to come.
On that note, Mr. Bathwal, it was a pleasure talking to you. Thank you for speaking to Business Standard.
My pleasure, and always good to share our thoughts with you, Monojita.
Thank you, sir. Thank you.
Globally, policymakers promote and direct financial resources towards investments aligned with environmental goals. Taking inspiration from nations that have implemented green taxonomy, countries strive to establish precise definitions for economic activities or investments that align with environmental objectives, such as addressing climate change or curbing deforestation. In 2023, the RBI in a report said that India needs to have its own green taxonomy. But what is a green taxonomy? Shivam Tyagi finds out.
According to the International Capital Market Association, a green taxonomy is a classification to identify activities or investments that propel a country towards achieving specific targets related to environmental objectives. An environmental target represents the overall outcome that a country aims to attain within a defined time frame, such as a net reduction in emissions or deforestation in a specified time. Green taxonomy is employed in the context of sustainable finance and investment. It helps investors, institutions, and policymakers to evaluate the environmental sustainability of projects and businesses. It establishes criteria for eco-friendly investments that align with goals like climate change mitigation and resource efficiency. A green taxonomy also enables countries to tackle greenwashing. Greenwashing is a process of conveying a false impression or misleading information about how a company's products and services are environmentally sound. Countries such as China, Russia, Japan, South Africa, Sri Lanka, Indonesia, and Bangladesh, and the European Union already have the taxonomies approved or in use. In 2023, the Reserve Bank of India facilitated green finance, allowing Indian banks and NBFCs to raise deposits for funding green projects. The move allowed providing practical avenues for channeling funds into environmentally friendly initiatives. However, in the absence of India's own green taxonomy, the central bank listed 9 areas such as renewable energy, waste management, energy efficiency, clean transportation, climate change adaptation, and sustainable water, among others, where the deposits can be deployed for now. In a 2023 report, the RBI emphasized the necessity of a strong statistical infrastructure for assessing climate risks. The central bank called for a unified statistical framework with a standardized taxonomy, regular disclosures, and greenhouse gas emission monitoring. Though an expert committee has been set up by the Indian government, it's yet to publish a taxonomy, which would require significant work relating to standardization and interoperability. The evolving landscape of green taxonomy is evident in the efforts of central banks such as the RBI and international regulatory frameworks like the EU taxonomy regulation. These developments underscore the global shift towards sustainable finance and responsible investment practices. As India embraces green taxonomy, it sets the stage for a more environmentally conscious financial sector that aligns with broader sustainability goals. The collaborative efforts of policymakers, financial institutions, and investors will play a pivotal role in shaping the future of green finance in India and beyond.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Green taxonomy could provide confidence to the financial sector in ensuring that the funds are channeled towards sustainable activities. For our next segment, I spoke with our consulting editor, Tamal Bandhopadhyay, on peer-to-peer lending and RBI's cautious approach towards it. Here's the chat. Hi Tamal, welcome to the Business Standard Banking Show. Let's start with something very interesting that you've written about before, also in your column as well as this week, is about P2P lending and how RBI has been very cautious about it. Now, of late, there have been more developments. Can you take us through some of these, and what are these issues that RBI is now a bit cautious about?
Yeah, as you rightly said, Ruchika, I flagged it off sometime last year. I think it was in July 2023. And I've written again because meanwhile, Reserve Bank of India has come up with certain clarifications and asking the P2P guys not to do certain things. And that's a private communication between the regulator and the P2P platforms. But what I feel is this: probably RBI has not addressed the root cause. I'm not getting into all the technicalities. The problem is P2P platforms are just an intermediary. You want to lend money and I want to take your money. So a P2P platform comes in and tells Ruchika, you give your money, and Tamal is a borrower. Of course, there are restrictions how much I can borrow and how much you can lend, but that's a separate story. And the P2P platform job is to play the role of an intermediary and earn fees from you, from me. That's all. They're not supposed to run their balance sheets. But what in reality is happening, P2P platforms are behaving and acting like deposit-taking NBFCs. Now, that's not done.
The other thing that RBI has been concerned about is the SRO for fintechs, and there were draft guidelines also that were issued. Can you take us through a little bit about how this SRO will work?
You know, it's a very tricky task because fintech is all pervading. You know, CII has its own wing for fintech, NASCOM is there, and then there are, of course, multiple associations within this segment. Because you have to see this is a conglomerate of regulated and unregulated entities. Okay, it's a huge task. You have, on the one hand, the banks and NBFCs, different kind of NBFCs, which are in the business of lending money, and they are also into fintech. Then you have pure play fintechs like payment aggregators, like loan apps, even UPI, or say Google, Amazon. Everything is there. So it's a very vast world. Now, how do you what kind of role the SRO play? In fact, if you look at the Reserve Bank of India's draft guidelines, which you are mentioning, that it's actually it wants the SRO to play like an extended arm of the central bank itself, because it has to ensure best practices, it has to ensure the security and safety part, then data collection, dispute resolution. It's a combination of everything. And as I said, it's a very tricky part. It has to be, there are multiple entities and the various levels, there are various layers, and some of them are regulated, some of them are non-regulated. So it's a very responsible work. Like IBA is for banking, MFIN and Sadhan, they are for the MFIs. But here it has to be like something omnipresent, omnipotent kind of entity everywhere. So I think it's a RBI wants someone which will be acting on behalf of the regulator in the industry to ensure everything. If you see that the customer protection is the key thing, and at the same time, it has to also encourage innovation overseas.
The other thing that happened, again, we're talking about RBI, the numbers released show that as of December 29, the aggregate deposits in the banking system has crossed 200 trillion. What does it mean for the banking sector? How do you look at this number?
Well, I mean, I think the past 7 years, Business Standard only reported, if I'm not mistaken, the deposit actually doubled. Okay, so it's a good story. I mean, obviously, but that doesn't mean that the banks have plenty of money and the deposit war for deposit will too soon. Because what happens is, you see that over the even now, and it's a past 2-year trend, is this: the deposit growth is lagging behind credit growth. Now, in percentage term, you said this is 200 trillion deposits, and as we speak is about close to 160 trillion credit of the banking system. Now, year on year, deposit growth is 13% plus, but credit growth is almost 20%. Now, again, if you see the year so far, deposit growth is 11% plus, credit growth is 16.5% plus. Now, credit has a lower base, but even in absolute term, you will find that probably credit growth is higher than deposit growth, and banks are supporting it through their capital reserve, etc., etc. So the fight for deposit will continue because what is happening, saving community is looking at, the savers are looking at different kind of investment. You have seen that how the SIPs have been growing, mutual fund asset under management has been growing, and there are direct exposure to equities as well. When the equity market is doing so well, so obviously why would they settle for a very small amount which the banks pay? And also at the same time, you see that another interesting factor is the combination and the composition of deposits have been changing. Savings deposit and the CASA has been going down for the banking industry. FDs are going up because people are, if they are staying, if they have liquidity, they are trying to shift to fixed deposits. So I think the banks, the war on deposits will continue, and banks need to think of newer instrument. Like for loans, they have always external benchmark related rates, which will go up and down. But for deposits, you don't have anything. I think they have tried the floating rate deposit in the industry in the past, but it never worked. But I think it's a time to relook at introducing or revitalizing or renewing the floating rate deposit in a smarter way.
All right. Lots of suggestions there for the RBI, Tamal, that it has to address the root cause when it comes to P2P lending. And obviously, it is a very complex area when we talk about the SRO. And you said that industry participation is important. And war on deposits will continue, as you have indicated. So lots to watch out for. Thank you so much again for sharing your insights today with us. It is time now for our poll results. Here's what we asked you last week. Would you prefer investing in bank FDs to shares and MFs? In an almost equal split, 50.7% of our respondents said yes, they would, while 49.3% said no, they would not. It is 2024 and very soon the Finance Minister will unveil the interim budget. Now, while FM Nirmala Sitharaman has said there would not be any big announcements, since it is an interim budget, there are still some expectations on the tax front. So here's what we are asking you this week. Do you expect better tax treatment for deposits in Budget 2024? Our poll is open today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, and our website. That's all we have for you today. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.